Hello traders everywhere, Adam Hewison here, co-founder of MarketClub with your 1 p.m. market update for Tuesday the 15th of November. Well, here we are halfway through the month and the markets are halfway decided which way they want to go. But before we go any further, ask yourself this, is one-on-one MarketClub coaching right for you? If you think it is or you'd like to find out more about that, just give us a call here. It's a free call and a free consultation. It's 877-219-1482. That number again, 877-219-1482. The call is free and the consultation is free, so take advantage of MarketClub's one-on-one coaching. See if it's right for you. You know, the reality of the market, what I love about the markets is that unlike most politicians, they don't lie. So the question is reality finally beginning to settle into the markets? The reality is things aren't getting better right now. The magnitude of the problem in Europe and Spain's failure to sell all of the $3.5 billion in notes today underscores just how fragile the euro economic system is right now. If Europe is weak, that's a big market for U.S. and Asian products, it can't help but spread to other parts of the world. One only has to look at Citibank, symbol C, and see how it's acting today to know that things aren't good. As we have continued to say in our blog and in our videos, things are not rosy and we don't expect them to get better anytime soon. If you look at the chart of capitalism over the last 100 years, you get a sense of just how these longer-term economic cycles work. It's going to take years, not months, to get out of these economic problems. Anyone who thinks differently is in la-la land. Every stock market in Europe is down for the year, in some cases double digits. France is down, for example, 18%, and Germany is down 13%. At the moment, the U.S. indices are pretty much flat for the year with the exception of the Dow, which is up approximately 4%. We want to pay close attention to our trade triangles and see what they're telling us. We can see some wonderful trading opportunities to make money in the next 12 months using these tools. So now let's go to the charts and the video and see how our trade triangles are doing and how we can create and maintain your wealth in 2011. So as I say, if you haven't had a chance to give us a call on 877-219-1482, give us a call and see if one-on-one Market Club coaching is right for you. So let's go to our portfolio. So here we are, home page. I'm going to go to the portfolio manager, and as you can see, not much change. Still plus 55, plus 55. This was actually early down to 75, minus 75, looking a little bit heavy, but you can see the inaction in these markets, and I think that's one of the key things to look at. So looking at the S&P 500, you can say really with somewhat certainty that for the past several weeks, we've just sort of been going in this sort of sideways mode, just kind of going along here and support here. So that's the key. It's basically 1220 on the downside, and you've got the upside around about 1300. So you've got to break out of these two levels to get this market going higher. We've got some negatives, of course, one of which is our monthly trade triangles, which is still negative. The daily is still negative. And the only one that's positive is the weekly, and that's showing a counter trend. If we had all of these red, then I think this market would be certainly breaking down below the 1220 area. Also on some of the MACD and some of the Williams percent R that we follow, we're sort of like just in limbo there, not quite oversold, not quite overbought. And as you can see right now, here we're in the middle of the Donchian trade channel. So we're not at an extreme like we were here, or like we were here or here. So again, we're just sort of in this limbo area. So we have to let the market tell us what it wants to do. And eventually it will tell us what it wants to do. So let's clear the screen and go to our next market. And that's really just going to be the Dow. And you can see the Dow is the Dow is actually getting very close to potentially breaking out over the recent highs we've seen here. But certainly the PSAR is at 12,179. If we go over that level, that would indicate that we may see some further upside action. So pay close attention to that also. This is the NASDAQ composite. Now, the NASDAQ composite is not doing very well per se. It's in the sideways mode. And you can really, again, you can go back, to this date right here, which is sort of like right there, and just sort of draw your lines in there. It just hasn't really done anything. It sort of stayed in this range, and eventually it has to break out one way or another. So if it's on the bottom, it's 2,600 on the NASDAQ, and on the top, you're looking somewhere around 2,750. So I think they're the two numbers to look at there. Very little to do here. We are showing 65. Basically, it's a trading range. You've got the monthly down, the weekly up, and the daily down. So again, this is something you really want to pay close attention to, because eventually this market will move, and we will see a big move coming in this market, and you want to take advantage of it. So let's go to our next market. Now let's just clear this off the screen first of all. Next market we're looking at is silver, and silver is the same way. We've got this plus 55 trading range, very, very narrow range here. You can see much like here, it sort of popped out a little bit, but no enthusiasm for the long side in this market. Now, I was doing some analysis on the gold market. I want to share that with you in just a second, but you can see it really kind of nothing going on here, but certainly the one would probably want to be long as opposed to short if we break out over the 36 level. That's the key level there in my mind. But for now, we are just basically treading water. So let's go to the gold market, which is a totally different picture. Gold, we've got both our weekly and monthly in a positive mode, and that looks like it wants to go higher. But we did some long-term analysis on this market, and we did a video last year, as a matter of fact, and I want to share that with you. You can go to our blog and find it, but if I scope this out a little further, you'll get an idea of what we're talking about. And I want to take the Williams, the Donchian trade channels off, make this a little bit cleaner. So this is what we were looking at. We sort of identified these tops, and they've been pretty spectacular in terms of how they've come in terms of measurements. And let me just show you how that works. If you look at the cyclicality of this market, you can see that we were looking for a top here. We said the Q3, we should see a top in gold, which looks like it has. This was another one. This is another one. And this is another one. Now, if you measure these out, they become actually pretty accurate. So if we measure this out into the future, we're looking at making a high for gold in June of 2012, and it may actually come in May as well. So it could be one of those months, but that's definitely the time window we should see a similar pattern. Now the question is, are we going to keep growing at the same magnitude? And if we are, then we're going to see gold certainly go over the $2,000 an ounce level. So I think that's something to look at. As I say, we've got our plus for our monthly, plus on our weekly. The only negative is here on the daily, which is not so important for gold. I mean, these are the two big ones for gold, in my opinion. If you're an intermediate term trader or a long-term trader, just pay attention to these two triangles. Very, very important. So let's clear that off the screen, go to our next market. And the next market we were looking at is going to be copper. And copper is actually putting in quite a good performance today, which is, you can see we're still sort of staggering back and forth here without any real direction. And we are lower for the week, but however, there's not a convincing lower. I expected if we were to see this market come down and close, gosh, down below maybe 345, 3.45, I think that would be a little more negative. But for the moment, it looks as though we're just sort of rolling over. Nothing really dramatic to say about this market one way or another. So let's move on to our next market. And the next market we're looking at is going to be the crude oil market. Now, crude oil, for some reason, I'm going to put my Donchian trade channels back on because I love those as an indicator, and our parabolic. But you can see basically, so you just click outside of that and it puts it on the screen. You can see the parabolics coming up quite dramatically. We're now currently at 95.80 on the PSAR. PSA stands for Parabolic Stop and Reverse, developed by Wells Wilder. It's a great little indicator, good for trending markets. Obviously, in a trading market, you can get chopped to pieces, but in trending markets, you can do well. As you can see, the signal was right here, but you would have gotten clipped right here on this pullback, but you would have gotten back in, and it worked out well. Now, the question, of course, is staying with the trends, and is the $100 a barrel level psychological enough to stop this market from going any further? And I think that's going to be the key. The 100 psychological level in crude oil is very, very big. You can see our weekly and daily indicators are positive, while our longer-term monthly is still negative, and it has been for quite some time. If we scope this out just a bit, you'll see the monthly came in way, way back here. And again, this is an indicator. We normally trade the weeklies against this, or you trade the dailies against the weeklies. But you need to filter your trades, and if you filter your trades, you put the weeklies in here, you'll see how. And these happen dynamically, these weeklies, and you can see a weekly sell here, a buy here, and so forth and so on. But the last buy was right around 87.48. You really need, this is a game plan we advocate in terms of trading, but we've had a pretty good move here without any real news. I mean, part of it was the move in October in the equity markets, but we've been obviously doing well even without the equity markets. We're sort of climbing this wall here, but certainly $100 a barrel is going to be a psychological level, and it's going to get a lot of press if we get there. So let's see how things work out with this market. Let's go to our next market. The next market we're looking at is going to be the dollar index, and this is actually performing pretty well. We're getting back towards the highs. We thought the market was, longer term, we expected this market to be up towards the 79 to 80 level, test these levels again. I think if it closes over 78, it's 77.90 right now. Today, the high was 78.09, so we did get over that level. We haven't closed over that level. And the previous high close that we did see in this market was 70, let me just get that right, 77.92. So we're pretty much right close to where we closed before. So I think if we can close over 78, I think that would be a good way to close this out, to push it up. But one way you can do the close-only charts, which I really kind of like to look at sometimes, is just click here. That's a line graph. And just click on that. You can see very quickly, and we'll take the some of these off, make it simple. So we close over this level here, 77.92. Over 78, I think is a good chance we'll see this market go higher. So that's how we see it right now with the dollar index. We're still positive on this. We've got all of our trade triangles in green. Very strong trend. It's in strong hands, in our opinion, and this market can go higher. So let's take a look at our next market. And that's the CR, Reuters Jefferies CRB Index. And that's sort of flattened out a little bit here. And I put and we'll go to 3 months, and you can see how it's just flattened out here. And really, you've got the PSAR above the market now, which is a little bit negative, even though we're putting a good day today, certainly. Kind of surprised that this market came back so much. Partly, it's because of the crude oil market. And let's just put our daily. Yep, we had a little daily buy signal that came in here at 320, and it's pretty much where 320.56 is 320.58, pretty much where it is right now. But very short term, I think that's going to be. If we need to get anything going in this market, inflation-wise, it really needs to go over this 325. That'd be one section. The next would be 345. So you've got some work to do here. We may spend time down here for a while, but let's take a look. I think we've covered all the markets we normally cover here, but let's take a look at another market. Let's just see. Let me pull this open here. We take a look. And we mentioned Citi in our comments, and let me just put it up here. If we have Citi, there it is. So we're looking at Citibank right now, and Citi, really, look at our trade triangles, all negative, minus, 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 strong downtrend. We just poked out below the low of the Donchian trade channel. We are oversold, so we may have made a low here, temporary low. But the other thing to look at too is you can measure this pullback, and that's what I love about the MarketClub, is using some of the tools we have. And you can click, this is the Fibonacci tool, so you click on the top there, drag it down to the lows, and you can see we got back into a 50% pullback from this entire move. And this is the entire move that took place in October, the strong move. So we're back to an area. Would I buy Citi? No, I wouldn't. Not with a minus 90. I think this is a trend that's still down. The market's actually been pretty negative for most of the week and most of last week too. So I think generally speaking, you want to give this market a pass, but it does tell you what's going on in the international banking circle. So let's wrap it up for today. It's been a lot of fun. We're going to be back tomorrow, and we are going to have our weekend show, or I should say our weekday show at 5 o'clock tomorrow. Be sure to tune in for that. I'll be back here at 1 o'clock tomorrow afternoon with your midday update. But also, if you have a chance, give us a call at 877-219-1482. It's a free consultation, and see if it's right for you. I think you may be surprised. But Adam Hewison, wishing you every success in the markets, and have a good day trading.